There's a new sheriff in town. We have a new administration, which means we have a different SBA director, and different administrations have different priorities. And this administration is hell-bent on reversing everything that the previous administration did. And so here we are again, bracing for more change to the SBA 7A loan program. Hey, I'm Ray Drew, an actual SBA lender, and in this video, I'm going to explain how all of these changes will impact you, the small business owner, and it will impact you. Let's start with a quick recap of how the previous administration changed the 7A program. 2023 brought on sweeping changes to the SBA 7A loan, which is the flagship program at the SBA for lending, and I made a video about that last year, which we'll link in the description below, but here's a quick recap of what happened. They removed some key underwriting requirements, which allowed more flexibility for banks. They increased what the SBA considers a small loan from $350,000 to $500,000, which is important because small loans can be processed with less restrictions. They allowed more non-bank institutions to come into the program. And that was a big deal because up until that point, only 14 non-bank licenses had been printed and no other licenses had been printed for the last 40 years. But now they're up from 14 licenses to 21 licenses. They also introduced a risk mitigation framework to combat fraud in the SBA 7A loan program. And ultimately, they just changed a bunch of rules and regulations that took the program in a completely new direction. One other thing that the former administration did, and this was critical, they continued waiving the SBA guarantee fees on loans up to a certain amount. It changed over the last few years, but most recently was up to $1 million. Now, I know what you're thinking. SBA Ray, how can they pay for the program if they aren't collecting money on the vast majority of their loans? Well, you're correct. Maybe you should run the SBA. For the first time in many years, the SBA had negative cash flow in 2024 to the tune of hundreds of millions of dollars, and that's not good because banks, Congress, and the SBA all operate under the understanding that this program will operate at zero subsidy, meaning no charge to the taxpayers. But it's not just the lack of revenue hurting the SBA, it's also the rising defaults. The default rate for the SBA 7A portfolio was 3.69% last year. It's nearly double compared to where it was 24 months ago. But here's the thing. The default rate was kept artificially low in prior years because of all that COVID era relief. So really, all those loans that should have gone bad during COVID but didn't because they were being propped up by all those drunk sailors in Washington, D.C., were able to keep their loans current. And now the Grim Reaper has come to collect. So I don't think the default rate really has much to do with those changes. Not to say it won't in the future, but the loans that defaulted last year, those were those zombie loans I mentioned, as well as the result of rising interest rates. SBA interest rates damn near doubled from the beginning of 2022 to the end of 2023. And as we know from history, interest rates and default rates are closely correlated. But politicians and lobbyists aren't going to let these pesky facts get in the way of their interests. The default rates are being linked to the Biden administration's SBA policy changes, which is why we're starting to see and will be seeing a lot more reversals. Let's start with what has already taken place. On March 7th, the SBA issued their first policy change under the new administration, and basically what it said is that any business getting SBA assistance must be 100% owned by US citizens and legal permanent residents, so green card holders. Now, previously, the cutoff was 51%. This impacted me in real time. I had a deal in my pipeline where one of the minority owners was a UK citizen. So basically, no longer can you have any foreign investors on your cap table. I guess their thought is that we shouldn't be providing any assistance to foreign nationals. Come to think of it, I did a loan a couple years ago that was 51% owned by a US citizen, and then 2 Canadian citizens each owned 24%. That loan wouldn't have been eligible today. Now, practically speaking, what this means for you is that if you're buying or starting a business and plan on using an SBA loan, make sure you aren't partnered with anyone who doesn't have either citizenship or green card. And if your business is partially owned by someone who does not have a green card or citizenship, well, if you want an SBA loan, you may need to buy them out first. This move tells me that the administration is serious when it comes to incentives and disincentives. So this is where we need to pay more attention, because small businesses serve an extremely important part in our economy. They create nearly 2/3 of all new jobs in the United States. They're embedded in our supply chains and they foster innovation. So if the administration wants you to hire American employees, manufacture your product in the United States, and buy domestic product, there are levers within the SBA they can pull to get you to move in that direction. So pay attention to this. And this would be a good time to remind you to click that subscribe button, because change is coming. And this is the most credible source on the internet for all things SBA. Aside from the policy notices, the other big changes at the SBA has been the layoffs. They have cut 43% of their staff. That's nearly 2,700 jobs. They're returning to the headcount that they had before COVID. Only issue there is, since COVID, the SBA has to manage the aftermath of PPP. Their portfolio at EIDL has exploded during COVID. And to top it all off, the SBA is now going to manage student loans. Now, how does this impact you? Jury's still out on that. Hopefully it won't. But you can certainly protect yourself by working with a preferred lender, which is a lender that has PLP status, meaning they can approve your loan in-house on behalf of the SBA. Now, these changes are just the tip of the iceberg. The SBA administrator, Kelly Loeffler, this lady, laid out her list of priorities for the SBA. Notably, number one on the list is promoting US manufacturing. So there's this office within the SBA called the International Trade Office, whose main goal is to promote US exports around the world. And that office is being transformed into the Office of Manufacturing and Trade. So what does that mean for you? Well, there's several loan programs having to do with exports that might go away. My favorite being the International Trade Loan. This is a variation of the 7A loan, which offers a 90% guarantee versus the traditional 75% guarantee, allowing lenders to make loans that they perhaps wouldn't have made otherwise. I personally love this program. It almost seemed too good to be true, and now it's on the chopping block. That said, I'm interested to see what comparable product they will be creating to incentivize US manufacturing. We shall see. Now, this list has 15 priorities, so I'm going to kick this thing into 2x mode and speed through most of them. Ending DEI, supporting DOGE, i.e. the layoffs, requiring all SBA workers back in the office, conducting an audit, cutting regulation, improving SBA customer service, I like that one, and cracking down on fraud. Now, the fraud wasn't really a problem in the 7A and 504 programs. It was, however, heavy in the PPP and EIDL, and we were already cracking down on fraud, but okay. No one's going to argue with that one. Now, the next one is interesting, and it's listed at number 8, middle of the pack. That is protecting the program, meaning the 7A, and restoring underwriting standards. It calls out the zero subsidy nature of the program, which we mentioned earlier, and restoring underwriting standards. Translation, tightening up. This is where you will see the most impact. It goes on to specifically call out do what you do, which was basically the entire theme of the sweeping changes set forth in 2023. It was basically the SBA's way of saying, hey banks, we know you've been struggling with all of our confusing rules, so we're just going to remove all of these rules over here and you can do whatever you feel like. And obviously that hasn't gone over well. With this walkback, we'll have to come an entirely new SOP. As for when, I'm not sure. Maybe by the end of the year, but probably next year. But we'll see. But it will happen. How do I know? The SBA industry and the banking industry are lobbying for very similar measures. The other day, the banking industry's trade organization spoke to the Senate and laid out their suggestions for what the new administration should do to preserve the SBA 7A program. And that list also included reinstating certain underwriting criteria that was removed with the do what you do. And I can tell you that the SBA industry has not been crazy about do what you do either. We all joke and we call it do what you've been doing. And thankfully so, because that's where we're headed. Now, when these changes do come, you can bet I will be making a detailed video breaking it all down. But Here are my top 5 most obvious changes that I think are coming and will impact you the most. Number 1, equity injection requirements could get tighter. Number 2, debt refi eligibility might be curtailed. Number 3, rules around borrowers with criminal histories could change. Number 4, SBA small loans may be redefined. And by the way, just in the time it took me to make this video, we received breaking news that the SBA guarantee fees are in fact back for all loans. The fee waivers are officially gone and the fees have returned to pre-COVID levels. For loans up to $150,000, that means 2% of the guaranteed portion. Guaranteed portion is typically 85% of the loan on that size. For loans over $150,000 up to $700,000, that means 3% of the guaranteed portion, which in this case is typically 75% of the loan. And finally, for loans over $700,000, the fee is 3.5% of the guaranteed portion, again, typically 75%, and another 0.25% of the guaranteed portion after the first 1 million, which is the standard. That's what it's been for many, many years up until COVID. Now, if you'll please excuse me, I gotta get this thing uploaded before we get another procedural notice. Please continue to follow along so you can make good decisions for your business as we ride out this period of uncertainty. So there you have it. If you found that video helpful and you want more expert advice from an actual SBA lender, then I would invite you to hit that subscribe button because I've got plenty more where that came from.